Thing number one, we're talking Nvidia. Nvidia's rise to Cisco 2.0, boom or bust.
All right. So, one of the things that people have done over the last couple of years is they've compared NVIDIA to Cisco from the late 90s. And the reason they're doing that is it's kind of the pick and shovels play. What that refers to was back in the 1800s, the big California gold rush, when so many people headed out west to, try to mine gold and make their fortune. And many and most of those prospectors didn't make any money doing that. A lot of them lost money. But the people who reliably made money were the people selling picks and shovels and Levi's blue jeans to the miners. Back in the 90s, Cisco was selling computer servers to all of the big new .com companies. And that was a very fast growing, profitable business. They were kind of the picks and shovels play of the .com boom back in the late 90s. Over the last couple of years, NVIDIA has been the picks and shovel play of the AI, the artificial intelligence space, selling the best graphics processing chips, which are ideal for these AI applications. Now, one of the things that Cisco did back in the 90s that looked great, but got them in a lot of trouble was they did a lot of vendor financing. And so what that meant was they would go to their customers and they would say, hey, you want to buy a bunch of our servers? Okay, great. It's going to be $10 million or $50 million or, however much they were charging. And Cisco would say, well, don't worry if you don't have the money, because back then the money was all fake anyway. It was all of these companies had insane stock market valuations. And so Cisco would basically just give these companies a credit, um, book book this as revenue and give the companies their servers. And they call this vendor financing, and it was great because they were able to keep booking sales. The problem was when those .com companies went out of business, Cisco didn't get paid back, and it was a huge problem for the company. Now, there's been a lot of discussion that Nvidia is doing the same kind of thing, and the answer is yeah, sort of, but with a big difference. So last week, CoreWeave, that's one of Nvidia's big customers, secured a $2.3 billion debt facility in order to buy NVIDIA GPUs. And so that sounds like the same kind of thing that Cisco was doing about 30 years ago, 25 years ago, something like that. But in this case, the funding came from Blackstone and Magnetar, not from NVIDIA. So unlike Cisco, NVIDIA gets to keep the huge sales increases, but they're outsourcing the repayment risk. It's actually a pretty strong move by NVIDIA. It's something that if you're an NVIDIA investor, you'd want to see.
What do you see, Gary, that is different between Nvidia here in 2024 and Cisco in the late 90s, if anything?
So, a lot of people, we've talked about this one before, Rob. A lot of people make that comparison, the picks and shovels comparison between Cisco back about 25, 30 years ago and NVIDIA now. And, I get it. I understand it, but I think there's a huge difference. And the difference is back in the 90s, a huge chunk of Cisco's customers were basically pre-bankrupt .com companies. Back then everybody was selling dollars for 90 cents to grow revenue. They didn't have a business model. They just cared about eyeballs. They just wanted to get eyes on things and figuring once we build enough volume, we'll make money. And that worked for a few companies, but most of them went bankrupt. They went out of business. And it was a huge problem. NVIDIA gets more than 50% of its revenue from 5 customers, but those are companies like Microsoft and Apple and Google. And, NVIDIA is largely selling to mega cap, fast growth tech companies with fortress like balance sheets. These are all companies with huge amounts of free cash flow, tons of cash on the balance sheet. In this case, the probability that one of NVIDIA's customers, one of their big customers, goes bankrupt is approaching zero. Nothing zero, but it actually looks really good for them. The biggest risk I see for NVIDIA is a little bit different. It's that one of those big 5 customers might decide, hey, we're spending tens of billions of dollars a year on AI. We don't really have a business model. We don't know how we're going to make profits from this. And if they were to slow their purchases from NVIDIA by just a little bit, that's going to crash the growth rate. And, NVIDIA has been growing more than 100%. This year, they're supposed to grow about revenue about 100%, slightly less. So any slowdown from one of those 5 customers who aren't making money from AI would be a big deal to Nvidia's stock valuation, but the whole company isn't at risk here like it was with Cisco, back in the 90s. So I think Nvidia is in better shape than Cisco. I understand the comparison. It's not one that I particularly favor.
Let us know what you think in the comments. Can Nvidia maintain their lead? Do we see a Cisco 2.0 scenario? Gary, thank